All right, welcome back, everyone, to the Real Estate Hacks podcast. Today, we're going to be talking about the Mortgage Professionals Canada year-end annual report for 2022. Some really interesting stats in there. We think it's going to bring a lot of value to all the people that are interested in getting into the housing market or who already are and are just interested in like rentals and all that. So let's get into it.
Let's go.
Yeah.
Great introduction, Mike.
Thank you.
My name's Andrew, if you guys don't know.
Yeah, I'm Graeme Thompson.
Jerry McGraw.
Beauty.
And Michael Citron, as you guys know.
So let's talk about that report. So what is it? I think it's a survey. How many people do they bring in for that?
Yeah, so it's a survey that they do. So they survey 2,000 people. Now, this is like homeowners and also people who are renting, and they have a bunch of really interesting stats on everybody that's like involved in the housing market, really. So tenants and homeowners and investors as well.
Okay. And what do they focus on?
They're focusing on like trends. So from these trends, you can kind of see like where real estate is going, how like certain things affect the real estate markets, like immigration and like even like tenants becoming like doubtful of home ownership and things like that, right? So it can really point you in the right direction to predict what's going to happen in certain markets across Canada.
Good way to understand consumer behavior, right?
Yeah, exactly.
Is it more consumer behavior focused or is it interest rates as well?
I'd say it's more consumer focused.
Well, yeah. So what they're doing is they're focusing on, all the factors, affordability, the interest rates, how that's affected them. There was a ton of interesting questions that they had in there.
Migration,
migration,
housing
interprovincial
starts.
migration.
Yeah. A lot of people leaving Ontario for BC for sure.
That might be the way to go, guys.
Yeah, maybe.
I know
Live
a
up in
couple
the
people
mountains.
that are moving there.
Yeah?
They're like, we're getting out of Ontario. We're going to BC.
Yeah, no
Mountains,
kidding.
pine trees.
Well, I remember Andrew was telling me just a couple of weeks ago, he was talking about Windsor job, like the job employment here. It's been
Jobs market in
skyrocketing.
Windsor.
Skyrocketing.
Yeah, so they've added, what's the stat there? Basically, I think they've added around 25,000 jobs in Windsor since last September, which is huge because like if people are working, they can spend money, they can buy homes, they can go to eat at local restaurants and
Yeah.
And a lot of these big, like the Amazon plant's not done yet. The new bridge isn't even done yet. And like the hospital, not done yet. So
Well, that's what they say. Like the jobs are going to be here in Windsor for a bit because they're working on the bridge. Once the bridge is done, whenever that is, they're going to roll over to the hospital and then they're building all this other stuff like the battery plant.
the battery plant's gonna be
Like
nuts.
I drive by the expressway like all the time there by Banwell.
Just to check in on the battery plant?
Yeah, just to check in on my project. No, I wish. No, it's a sweet project though. Like every couple of days you drive by, there's a new section and it just keeps getting bigger and bigger and bigger. And the jobs there, I forget the exact number, but it's going to be like booming.
Yeah, that's an absolutely massive plant. If you take a drive by there, you can see just how large scale it is.
That's crazy. It's a big investment. Like just the steel there alone
For
to
sure,
construct
yeah.
the walls. Like
Yeah, I think it's going to bring a lot more investments too in the future. So I think this is going to keep going in Windsor for like the next like decade or two, It's going to be big increase in jobs and bigger increase in population for sure.
yeah, Windsor's definitely got a good look right now.
Same with the Detroit as well, killing it. Like we're
Detroit,
so
yeah.
grateful to be on that like border city. So we have a lot of I think there's like 9,000 people or something like that last time I looked that live in Canada and work in the States,
Yeah.
which is crazy to think
Yeah.
about. And they're making American money, which is 40 cents on the dollar right now.
USD. Well, it's $1.33 since everyone might get rid of the USD.
It's dropped a little bit.
See what happens there, but
Let's talk a little bit about the report. So, for example, consumer behavior. I mean, consumer confidence has dropped a bit. The number of respondents that were asked about if they think it's a good time to buy a home in their community is down to 26%, which is down 3 points from the end of 2021. What do you guys think? Do you think people are happy they bought a home? Think it's a good time to buy a home? What are you guys seeing in the Windsor market?
all right, I'll take it away. I think like the previous report that had came out, 90% of buyers were very happy that they purchased a home in 2020 and 2021. I think like the change of the new report, like obviously with rates, like homes actually being less affordable now than they were when our average sale price was $725. So I think, and a lot of people I talk to too, they're like, oh, we're going to wait the rates. We're going to wait.
Yeah.
And now I know they announced that they're not going to raise prime today, which is huge. So I think buyer sentiment might get a little better.
For sure. Yeah. Like I do think most people are happy that they did buy a house, But I think also if they were in like a variable rate, they're a little scared because their payments have definitely gone up. Like I know some people who bought houses last year and they were like happy. It's like their dream home, they bought it. And then, the rate started to go up and they were kind of like, oh shit, like I got to start putting in overtime. I got to pay off this mortgage as quick as possible because like I'm going to like fall behind on some things here because my bills are just piling up now.
And Mike, this is a question for you here. As an investor, we do a lot of our mortgages on variable because we want to be in and out as quick as possible. Right. For the average homeowner that's going to live in that house for 5 or 7 years or so, or even more now, are you finding that they're going into the variables, or are you finding that more people are going into the lock-in, the 5-year locked? And if that's the case there, that makes more sense to what Andrew was saying with 90% of people being happy because they're locking in at 1.5, even under 2 points, right?
Yeah, I'm sure that the the statistics probably skewed a little bit because of all the people that went variable and then the rates went up.
For
and now
sure,
they're having a
for
hard
sure.
time paying, right?
Yeah, like a lot of people were going variable before because you could qualify for more, and the market was so hot that people wanted to like go in at their absolute max, right? So a lot of people were going with variable because it was less for qualifying rate. Now though, everybody's going with like a 1 to 3 year fixed rate because everybody's predicting that the rates are going to drop and they want to be able to refinance into a lower rate and have as little as a penalty as possible, right? When it comes time to refinance.
What's a penalty on something like that? Is it like a couple months of interest or?
That's on a variable. The fix is a formula, right?
Yeah, so on a variable, it's 3 months interest.
Okay.
So it's like pretty small compared to
it's not a big deal.
Yeah, fixed. So for fixed rate, it goes off of the interest differential ratio.
It's a whole formula.
Yeah, it's a formula. But there's a lot more interest. Like say you're in like a 5-year term and you're breaking your term after 2 years.
Okay.
You're gonna have like the formula is going to go off of the 3 remaining years that you have on your term, and they're going to calculate using that. So you're going to have like a pretty big penalty. Like I've seen penalties that are like as much as a car. Like
I've seen like last year there was a Toronto Star article, I want to say, or Sun, where like someone had to break a mortgage with TD and it was like 20 or 25 grand.
Yeah.
I've
I've
heard
seen
that's
even
kind of light
worse,
too. Yeah, I've heard like 50,000.
Really? Yeah, that's pretty bad.
One thing about a house in Toronto, like $1.7 million, right?
Yeah, it's different than Windsor. Yeah.
I also noticed that there's a lot of people, 33% of non-homeowners are actually just giving up. They're not interested in purchasing a home anymore. What do you guys think about that? You think there's going to be people that are just happy renting?
I think some people, like me personally, I don't think I could ever be happy renting. Like I just like owning my own assets and everything. But like I don't know, like hats off to those people that are fine with that. Like sometimes I kind of wish that was like that. Where it's like I'm just gonna rent and that's it, and not like like really be part of the whole rat race where I gotta get like these properties, these assets, and build like all this like generational wealth, right? Like I do think like it looks like a lot of people are going that way, and hats off to them if they can do that, if they're comfortable with that.
I think a lot of people are happy renting, especially if they have a good job. Like we were talking earlier, like if you have like $100K saved up, like you might only get it pre-approved for $400,000, which in Windsor, still you can get a nice house, but if you want like the house, maybe like a South Windsor that's a little nicer and stuff, you might need some more money. But you might have a good job, like you might be in tech or something. You got $100K saved up, and you don't mind renting for $1,800, $2,000 a month. You'll get a pretty nice place.
Yeah, and it's kind of like more affordable depending on the house that you want, right? Like there's like $1 million homes that are renting for like $3,300 a month right now. If you were to get a mortgage on that,
like split on it.
Yeah, like if you were to get a mortgage on that, you're looking at like 5-6K a month, right? So it's definitely more affordable in certain circumstances.
And that's what I'm starting to see too, even as investors. Some of these properties that we're dealing with now, they're way nicer than what they were 5, 6, 7, 8 years ago. So when we thought about renting, even 5 years ago, the properties weren't that nice. They were kind of slummish.
Why do you think they've gotten nicer, Jay?
Because of affordability too, right? As people come out there, these young professionals, even some of these retirees that have, cashed in and they want to go to Florida. So the retirees want to go to Florida, right? They can rent here, maybe rent a nice condo or a nice house, and they still want a nice home. They don't want some of these,
You're saying like the quality of tenant has gone up over the last like 5 or 6 years.
Both the quality of the tenant and the quality of the property. When I first started in real estate, most of the rental market, like realtors didn't want to deal with the rental properties because they were gross. And then as I've progressed to 2023 here, we've seen a lot of these properties. Most of the rentals we're seeing come in the market, and even Graeme probably talked about this as well, they're a lot nicer. Some of these are nicer than most people's houses.
There's some nice rentals out there. Like even I've seen some pop up on Riverside Drive. They're like stunning.
Absolutely, and you also have the protection of the LTB, right? And I mean, what are rate increases this year that you can raise rents 2%?
2.3 or something.
Yeah, you have the the assurity that your rates aren't going to go up. I mean, you don't have that with mortgages if you're on a variable, right?
Yeah, rents have gone up way less compared to this year in mortgages.
Oh, huge difference.
It's not even comparable. Yeah.
Yeah. Well, what would you have? $1 million loan last year at 1.5%, 2% versus now. What's the difference in a monthly payment?
Was it around like $350 maybe in the peak, like per 100,000 financed?
Yeah, it was about that. So like
Now
on
it's
a
like
$1 million
six,
loan,
maybe?
you're looking at like 3,500, maybe $4,000 depending on what the rate was. But like
Difference.
Yeah, no,
To
yeah,
start.
like that's what the mortgage would have been. Like now, like with today's rates, like I just did a mortgage for someone. It was like a $600,000 mortgage, and their payments were like $4,500 a month.
Expensive.
Yeah, so on $1 million, you're looking at probably like 65, 7,000. Like
It's a big difference.
pretty expensive,
And to essentially rent that same home, you're looking in the mid threes.
Yeah.
Which is honestly a steal.
Yeah.
Imagine renting like $1 million house for $3,500.
Yeah.
Like the landlord's not cash flowing at $6,000 a month.
I'm selling my house.
Like
Yeah,
honestly,
your fire sale.
if you really want to buy like $1 million home, like I think the play, if you're comfortable with it, is like buy an investment property that's going to make you some cash flow and just rent that $1 million home. Like I think you'll get your best bang for your buck that way.
There's no saying it's like buy where you can afford and have as a rental, and like rent where you want to live, because too many people want to own where they want to live. Like for example, they want, I want to live in Russell Woods, which is one of the nicest areas in Windsor, right? Well, a house there is going to start at what, $2 million. There's $500,000 down payment down there, right? So you can take that $500,000, you can buy it multifamily cash, or even use it to buy a 10plex, right? And then now you have this cash flowing asset. You could probably rent that same house for $4 or $5 a month.
Yeah.
Yeah.
You'll still cash flow.
You'll
Like
still
you'll
cash
still have
flow.
some cash after, yeah.
It's a great idea.
For
It's
sure.
super neat.
Yeah.
Or in Andrew's case, buy that Russell Woods house as well.
Buy the Russell Woods house?
buy the Russell
That'd
Woods
be pretty neat to live in Russell Woods. It's a nice area. Probably one of my favorite neighborhoods in Windsor.
Is it?
Yeah, I think so. Like I've just always liked to come see St. Clair Beach. I'm not really a LaSalle person because I think like the setup is weird. But I mean, some people love LaSalle.
It's a great neighborhood.
You still got it. Like LaSalle's got like Normandy Street, which is really prestigious.
I think
Like, that's
and I found
nice.
a lot of people in Windsor, at least, if you're more of like that South Windsor-ish kind of area, you're more South Windsor or LaSalle. And
Yeah.
if you're more like East Windsor, you're more East Windsor or Tecumseh.
That's 100% it.
Yeah.
Yeah.
Like, yeah, people that like LaSalle, they love LaSalle. Tecumseh people love Tecumseh.
So what are we seeing for like the rates right now? How they've been shooting up, but what's the difference kind of in the sense of like a conventional mortgage versus a variable?
Yeah, so variable, I think the lowest rate now is like 5.55, 5.6. Conventional side, the lowest is 4.89.
And what's the trends been going on that? Have we been seeing it kind of
They've been coming down the last couple months. There's a lot of really good promos out right now because the bond yields have been coming down, right? So, like lowest, like insured high ratio fixed right now is 4.39. That's my lowest. If you're talking insurable, you're looking at like 4.6-ish, and then conventional is the 4.89.
So for someone kind of going on a, let's just say they're on a variable mortgage right now, for example, my personal condo is at like 6.35%. There's possibly
You got some fire under your ass there, Jay.
I gotta work harder, right? But basically, what it does is there's options for people to go to fixed and probably drop 1.5 points, right?
Yeah, for sure. Like with the way that the Bank of Canada's been acting right now, like it might be worth like holding out and seeing if they start to decrease it. Me personally, I think we're going to see rate decreases by like midsummer. Like
Today was the prime announcement. They didn't raise it.
yeah, so I'm thinking the next one they're probably going to decrease it by like 25 bips.
So this is interesting because I think the Bank of Canada sent out a statement and they were talking about new first-time buyer. There's new grants or initiatives from the federal government that are helping first-time homeowners. Did you guys hear about those?
Yeah, it's that.
Yeah, it's similar to like the RSP, right?
Perfect.
It's like
Bang
a
on.
first time home buyer.
First home savings plan
type
account.
thing,
Yeah. Like from what I've looked into, it basically works the same way as like a tax-free savings account. Like I don't really see too much of a difference, to be honest, in putting your money in that or a tax-free savings account. It kind of works the same way.
Yeah, I feel like they came out with it to like
There's a
make
max on it.
convince people that we're gonna make homes more affordable, but
Yeah.
like they're not making them more affordable.
You can put $8,000 into the account a year.
8,000 a year, yeah.
So if you're living in Toronto and wanting to buy a house in Toronto, that's $1.7 million. Like, how is that going to help?
Yeah. Like in last year's
it doesn't.
midterm report, it's so the average sale price was $646,000 in Canada, and it was 22.5 times the income. Sorry, that was for Ontario. 22.5 times disposable income to buy that house per
That's
year,
nuts.
which is crazy. And then on the East Coast, New Brunswick is like 7.5. So Ontario's getting up there in price and getting a little more expensive.
Yeah, it seems like everywhere where there's like really high immigration, like you need like way more of your disposable income to cover all your housing costs. So
That makes sense.
Yeah, it goes to show that immigration does definitely affect your housing prices.
What do you guys think about migration? Like, I know we always talk about immigration and like Ontario's going up, obviously, but what do you guys see like on the migration? Like, do you guys?
Oh,
have any-
interprovincial?
yeah.
Yeah, I mean, people are leaving Ontario. They're they're retiring in BC. They're moving to cheaper communities or cheaper provinces out east. PEI. Do you guys see the jump in PEI?
Yeah, I read a stat. Like PEI, what people love about it is they work less. There's no rush hour traffic like the GTA. They get paid a little more, and homes are cheap. So I think I don't know the exact stat, but I think it's around 7.5 to 8.5 times disposable income for a house there.
Yeah,
Which compared to Ontario at 22.5 is like
It's a huge difference.
and you're by the ocean, so that's cool too.
pretty neat.
Yeah.
And they got oysters.
Lobster.
Yeah, they got lobster too. I love seafood.
Yeah, that's interesting. What do you think about people moving to BC?
BC, I mean, I've never been there myself. I got some friends that live out there, and like every person that I went to high school with that moved out to BC for like a year or two, they just never came back.
Yeah,
It's beautiful.
Like that's the trend that I've seen just throughout my life. But I know people are moving there. Like newly retired people, they're like, let's go to BC.
But the prices there are pretty high, aren't they? Or
Yeah,
are
it's
they,
like
or is it just like that Whistler, Vancouver area?
No, it's high. Like so 22.5 times disposable income in Ontario, and it's like 21.6 in BC.
yeah, it's roughly
For a
the
house
same.
there.
Yeah.
It's like almost the same. But you got to think like people cashing out their homes here. If they live in a big home, like basically they go there and it's like same. But they maybe get a better lifestyle where you got the mountains and snow and all this stuff.
For sure. Yeah, I
Cool
think that's why
lifestyle.
most people go. There's a lifestyle.
Yeah, it could be a great way to retire. You know, you sell your expensive home in Toronto, you move to Moncton in New Brunswick, and you pay a fraction of the price, and you have all those savings from the house. You don't pay taxes on any of it.
pretty neat.
And you live off that for the rest of your life.
Yeah. Happy
Not a bad
days.
deal. I noticed there was a difference between 2022 and 2021 in terms of the fraction of people using fixed and variable.
Yeah.
I gotta ask. I gotta know this. Do you get calls from people who got variable mortgages
Oh yeah.
in 2021 and they're just
That's Mike's whole day.
and they're having a hard time paying?
Yeah, like I've gotten calls from people. So like variable rates were like just flying. Like almost all the mortgages that I were doing were variables, unless it was like a super like conservative person that was like, oh, like I don't like the idea of it changing, But like most like investors are like, no, variable all the way, right? But like, yeah, I put up mortgages there, and like they'll like call me the next month after they got a rate increase, and be like, hey, like my like mortgage is saying that's gone up. I just got this letter from the bank, and I'm like, yeah, like we talked about that. It can fluctuate, and that's what's going on, Like there's nothing you can really do about it. Like you just gotta stay in it unless you want to refinance into a fixed rate. But like, I doubt you really want to. Like the one cool thing that some people did do is with most lenders, you can actually like just lock into a fix. You gotta pay like a small fee, but you don't have to like pay like a huge penalty or anything like that.
I want to say I did look into that, and I can drop my rate by, I think, 1.19%, and there's no fees, thankfully,
Yeah.
which is good.
So you doing that, Jeremy?
No, I'm just going to roll the dice. I have at this point. I might as well keep rolling the dice. That's not financial
So you
advice.
could go down from 6 to 4. Was that it?
Down from like 6.35 is down to like 5.19 or something, somewhere around the range
With no fee.
with no fee attached.
Sounds like a great deal.
It does, but like what Mike was saying,
How many
too.
more years do you have left?
Pardon?
How many more years do you have
Well, it
left?
would be a whole new contract. So I'm going from a variable right now. to
Yeah,
maybe
and then
going
you'd
to a-
lock that in
to
for
a 5-year
5.
I can do a
Another 5.
4-year, I think 4 and 5-year fix with my rate right now will be the same. But like Mike is saying, there's a potential that rates could start going down by the summer. So do I roll the dice and save a point, which in theory it will save, I think, about $130. So it comes down, is it worth locking in for 4 or 5 years to save $103 a month, or pray that the rates keep going down and I can save a bit more? But obviously, it would need to go down, like I think, let's say 1.2% for me to get that savings back. So it comes with one of those things where you kind of have to roll the dice and ask someone that.
Well, you know what's interesting is the data actually supports what you're saying, because I would think it's the opposite. I would think people after this big jump, they're worried that it could go even higher. They're going to go fixed. But in fact, it was the opposite. It went from 33% in 2021 up to 36% in 2022 for variable.
So people still want the variable because
More people want variable, it seems. Is that what you're seeing too? Are people betting on it going down?
People did want variable until it started to surpass where the fixed rates are. Now, like I'm seeing like very few people want variable.
So in recent months, it's starting to...
Yeah. I think that we are going to see variables come back though, like in the next like
If they start
6
dropping
months.
rates,
Yeah,
people start getting bullish on that because they're going to try to time it.
for sure.
Makes most amount of sense to do that.
Yeah. Most people, though, I think, are rolling the dice because it doesn't make sense to lock into a new 5-year term because most people end up refinancing after 3 years. So you're just going to have a big penalty down the road, right? So it's smart to just roll the dice if you can afford it, right? If someone's like really struggling, it might be worth it to do what you got to do to bring your monthly cost down, right?
Jeremy, as an investor, do you usually go variable or are you fixed?
Great question. So my first investment property, my duplex there, is locked in at 2.9% on a fixed. However, most of my properties since there have been variable because mostly what I've done since has been flipping, as you know, Graeme. So
Fees.
pretty much what it comes down is the fees, and then anything I do elsewhere that we do private, right? So we're in and out and we pay fees on that anyways. But right now my duplex is fixed. My personal condo is fixed, and then the other one is variable. What else do I have right now? Actually, funny enough, I have a property that I'm flipping. I bought it in 2021. It's the one on Elm there, and it's at a 1.49%. It's a variable mortgage, but fixed amount. So my rate's like insanely high right now, but my monthly payment's still like $500 a month. So even though I locked in at, I think 1.49%, and I think right now it's supposed to be at 5.3, I don't even know if I'm even paying any like equity at this point, or I'm probably like in
just
the negative.
interest maybe.
Your amortization's going up. That's what's happening.
Yeah, so I want to.
So it's probably at like 55 years or something.
So I actually have a sheet. I took a picture on my Instagram. It was at, I want to say, I think it's at 75 right now. 75 years.
75 AM. Wow.
But you know what? At the end of the day, it's a flip. And for me, I have the ability of knowing that my mortgage is only $500 a month. And I'm going to sell it next month. So for me, it doesn't really matter. And while I held it and I had it rented for a bit beginning too, it really helped having that mortgage at $500 versus, $800. So there's that option, I guess, as well with that fixed
Right.
amount there. So for people that like the payments, they'll see more of their interest or equity go up or down, right?
For sure. There's another cool product that just came on the market actually. Sold a couple of these so far, but it's a rate resetter. So every year you have the option of switching between fixed and variable. And there's no
Really?
penalty. Yeah, it's really cool.
Who offers that product?
I can't say it on the podcast. I'll tell you after.
Proprietary information.
Yeah.
That's interesting.
That's neat. What do you guys think about like buyer sentiment just in general?
In the sense of, do they feel like they overpaid?
No, just like in general. Like currently, what do you guys think?
I can talk about investor side.
Yeah.
From what I'm seeing right now is there's a lot of investors that are still active in the market, and I think they're having issue with the refinance. I mean, so I'm going to talk about the BRRRR method. So the BRRRR method is buy, rehab, refinance, repeat. Now, I think recently you've had to choose a really, really good deal to pull this off because lenders, especially on the refinance side, are very strict. So a lot of investors are having a hard time pulling off the BRRRR because when they go back to the bank's, a little bit more
Is that because the
strict.
way the appraisal comes in, like when they refi?
Yeah.
Appraisers, yeah.
Yeah, like if you spend $300K on a place, put $100K into it, and you're hoping the value's going to come back at like $550, and it comes back at $400, there's no equity to pull out. So it ruins their whole strategy.
Yeah, because when the market was steaming, it'd be like pick up some for 5. Every month it's going up like 20, 25 grand.
Yeah, for
So
most.
by
of
the
these
time your renovations are done, if it's 3 months, it's already gone up 75K without you even doing anything. Plus the renos. So the refi would have been huge.
with the way the market was going, it was like you were buying everything with training wheels on. It was the easiest market you could buy. And me and Graeme had many conversations about this with some of our investor friends we knew. People have bought properties that we look at and go, this doesn't make any sense. Why would you buy this? But in the end of the day, the sentiment was the market only goes up, and the market was only going up. And for someone to even buy a bad deal, sometimes even buying the worst deal, even me, we thought about buying some of these bad deals at the time. There was no bad deal because the prices only went up.
Yeah.
So the only people that
You just
got
buy
burned by
anything.
it were the people that bought in like the beginning of 2022, where they bought at that peak. They bought at that 700,000 average price point, right? And then they, like Graeme was saying, with refinances, you bought a flip, and we've seen people buy flips. Andrew, you've seen this as well.
Yeah.
Someone bought a flip for $500,000, put $100,000 into it. Now they have a $600,000 house that great, it's worth $500,000 now.
Yeah. Yeah, it's crazy. Like I was at a house yesterday. They paid $660 for this place at the peak last year. They did the basement, so they spent like 40, 50 grand on the basement. They just sold it yesterday for $580.
Shit.
So it took like a $120,000 bath.
Wow.
So yeah, it doesn't always go up, but real estate over time does go up.
But it's a long-term game.
Yeah.
Yeah, I think the one thing that if you are looking to get into the BRRRR method in this climate, one thing that you could do to protect yourself is when you're buying a property and you're hoping to fix it up and refinance, ask your appraiser to give you a before and after appraisal based off of their calculations. Don't do it yourself. I mean, I've seen really, really experienced investors try to do their own pro forma and still getting it wrong because the appraiser uses their own pro forma, their own numbers, and they're screwing up deals because the banks won't lend to them or they won't get enough money back.
It's a good way to look at it. Jay, what do you think about buyer sentiment, buddy? What are you seeing right now with the clients and
It's busy. I think the market's hot. I mean, everyone has their personal opinion on where things are going to go up or down, right? But ultimately, we're getting a lot of phone calls. And I mean, it's not the doom and gloom it was last year for sure. It felt like when it turned to 2023, everyone's resolution is to buy a house now, from my opinion. We're seeing a lot of properties on the market. And I think there's more properties starting to enter into the market, and they're selling now again, which
there's
is
more
great.
listings now actually than there was this time last year.
And I mean, last year when I had a listing, I had to list it for what it was worth, and then pray that we get close to that. Now we're listing it at $150,000 under ask again. So I think the market's kind of hot. I think there's a lot of buyers that have kind of felt more comfortable knowing that the rates are what they're at now, and it definitely could get worse, but it could definitely get better. And they're taking the risk on, okay, I'm going to enter the market now, and I'm happy, and I'm going to have a great house, right? So it all comes down to affordability as well. I think that even with it dropping down from the peak, like $300,000, right, or $200,000, people are more comfortable buying back in again.
Yeah, I'm seeing the same thing. I am finding too, like there's almost like a sense of like urgency with some of my clients. Like they're like calling me, like I had a phone call with one this morning, like she makes like so much money, but she's getting a raise in June, but she's like, I kind of want to wait till June, but I feel like I'm going to like miss the boat. I feel like right now.
A little bit of FOMO.
Yeah. Like she thinks that right now is like a really good time to buy because she's seeing that the prices are going up. So she's like nervous if she waits till she gets that raise, she might be priced out by then.
It's always interesting, like when no one wants to buy, like it's the best time to buy. Like if you would have bought a house, basically any house in Windsor, Essex, sub 600 grand last November, you're up 100 G's.
Yeah.
No one wanted to buy last year.
Yeah, it was dead.
Like we sold a house in Walkerville for 350. It'd probably trade right now for like 430.
Wow.
Yeah, and all you have to do is buy it, do no work, make a couple payments, and just get rid of it.
Well, me and Graham bought 2 duplexes, one each, right?
Yeah,
and
that was cool.
At the in
Oh, we
December-
should talk about this.
Oh God.
Little update on the duplex challenge.
So we bought duplexes in December, right? And I sent a text to Graham because it was an RBC bank owned duplex that was in similar condition as both of our properties, and it was sitting on the market for months, and it sold for like $290, and we bought ours each for $235, and then sure enough, Graham, do you want to talk about what happened with yours?
Well,
You sold yours, right?
yeah, ours sold pretty quickly. So we ended up, so we closed on January 20th. It was $235. We put about $80,000 in. I had a great team of contractors who came in. We were able to finish the renovations in under a month. I think it was 26 days or 27 days. And we put it right back on the market. Actually, while me and Jeremy were in Dominican on vacation.
That was like almost like a month and like 8 days later.
Yeah. And it was staged. Everything was ready. And we sold it for $410,000. So successful flip. Thanks to Jeremy and the renovation team.
At 235 buy when people were not looking. I mean, there was multiple offers on both of our properties, but they were like what, 5-10 grand over ask. Mm-hmm. Nothing crazy.
I think you noticed this. Actually, you pointed this out to me, Jeremy, was that during that time, and I think still now, people are wary of projects and they're looking for quick flips, easy flips. So I think there's an
buy and just
opportunity.
sell.
Yeah, there's an opportunity to, look at properties where it needs a little bit more work, because a lot of people are staying away from those, and you could make a little bit more. I mean, I just picked up a 5-plex that needs a ton of work. I don't know if you guys have seen it.
Yeah, I've seen
It's
it.
the ugliest 5-plex in Windsor.
Yeah, it's right by my project I'm working on.
Yeah.
So, yeah, I see it like daily.
Absolutely hideous. But I paid
Yeah, the curb
$420,000
appeal's not there.
$420,000 for 5 units. So
That's
I
pretty
mean, per
good.
unit price, you can't get that.
That's what
But
duplexes
nobody
are
wanted
selling
it.
for right now.
Nobody wanted it. So if you can take advantage of those, little tougher projects, get a good GC in there, get an idea of what your costs are going to be. If the numbers work, I say go for it.
I think it's a great idea because
Not financial advice.
I think me and you were having this conversation like last week, but you're
Yeah.
saying a lot of your buyers, they want turnkey properties, right? A lot of people don't want to put the hammer to work, right?
A lot of people don't. Like, they just want to move in. It's already ready to go. Yeah, they just like, I feel like before they actually start looking, they're like, we'll buy a fixer-upper, we'll work on it, we don't mind it. And then when you actually start to think about like, wow, I'm actually going to have to come home from work, actually hang drywall and do all this stuff, they're just like, I don't want to do that. Which I get it. Like, people are working hard, right? You don't want to have to go to work and then come home and then work on your house.
Yeah, definitely not.
So yeah, turnkey, definitely people want it. And I find like those properties, like the turnkey ones, sub 600, are flying. Like, if it's good location, it's really nice inside. Like, the renovation's not some whack job renovation, but like nice. People really love that.
I agree.
Yeah. Like, it'll sell so fast.
I like this episode actually. It was pretty good. Pretty informative. I think we'll wrap it up right about now.
Yeah.
Close us out here, Mike.
Okay, yeah. Thanks for tuning in, everybody. We're gonna have some more interesting stats for you on the next episode, so stay tuned.